traders, and welcome to the new Patreon suggested video of the week. So in today's video, I took a lot of the questions and suggestions that I've gotten here, and I put them all into one document about trading. So with that, let's get right into these questions. So one thing that I got was traders' goals. And what I separated was three different kinds of traders. We have hobby traders, part-time traders, and full-time traders. And I found that hobby traders tend to just want to learn, have fun, and potentially profit. Part-time traders have a job and use trading for supplemental income. And then we have full-time traders that many aspire to be. And these traders are looking to provide a main source of income and withdraw their profits every week or potentially every month. So the lifestyle for a part-time trader is going to be very different than the lifestyle of a full-time trader. This is what I would recommend for if you want to be a part-time trader. That's the question that I had gotten. What you could do is give some time to education. That's going to be looking at YouTube videos, reading articles, taking notes on both. 2 hours for analysis, looking at charts, looking at sentiment, looking at data and statistics on the market, and then spend about 15-20 minutes for reviewing your past trades. It could be as easy as just identifying a single mistake from each trade that you make. So if you take profit too early, you can notice that and then try to fix it. Or if your stop loss keeps getting hit, you can try to find a way to place different kinds of stop losses. What I would also recommend is spending about 45 minutes for active trading. So this means looking at the order book before you buy or sell, recording why you bought or sold, and just spending the time when you're actively trading to make a note of what you're doing. So the full-time trader lifestyle is going to be a lot more intense and organized as well. So the first thing I do recommend is waking up early and exercising. I found that of the successful traders and the unsuccessful full-time traders, typically those who discipline their days and discipline themselves have disciplined trading, which leads to profits. Those who go to sleep whenever they want and wake up whenever they want and never exercise, undisciplined more so, tend to have more undisciplined results. Now, if you don't want to exercise or you can't exercise, you can always meditate or do breathing exercises as well. But I found that just going for a run can be really helpful for just clearing your head because it increases blood flow to the brain when you exercise, which is going to make you more aware and also is going to give you more energy to trade throughout the day. So similar here, what I'd first recommend is the market overview. Just spend a few hours reading the news, doing some initial charting in the morning, then education. Then I like to take an afternoon break for full time, reviewing past trades and looking at your own trading statistics. What I mean by this is later in the afternoon, what you can do is potentially you could buy software or you could record it yourself, but you could look at different kinds of ratios, average risk reward, average win, average time in trade, statistics like that, Sharpe ratio, Sortino ratios, those kinds of statistics that can help you optimize your trading in the future. Then I'd recommend about, I would say 30 minutes of recording for active trading throughout your day. So again, this is just going to be noting when and why you made trades. This is going to be looking at the order book, buying and selling actively, and so on. And I would also recommend to close your positions before you go to sleep if you're a very active trader, a scalper, or you could put a reasonable stop loss and then head to bed. Again, throughout all these steps and throughout the entire day, you would also be trading. So if you're doing education, you might have alerts set up. You might have a chart in the background or on another monitor. And if there's ever a really good opportunity that comes up, you can execute. Even when you take an afternoon break, you can have alerts on your phone. You can have alerts on your computer so that when you're taking that break, if you get an alert, you can try to get in on a good price opportunity. So that's what I'd recommend. Really, you're going to be probably trading throughout the entire day. Sometimes you won't be trading at all because there's just nothing that comes your way that is an appropriate trade for your signal. But then sometimes you're going to be trading for many times a day. So really, this is the overview, like the structure of a full-time trader's day. And whenever the market looks good, you just kind of inject some actual trading into that day. So another question that I got a lot was equity. What percent of capital do I use per trade? A hobby trader just looking to have fun and learn about the markets, I would recommend using any amount that you would like. If you are willing to risk that amount of capital for your equity, so such as let's say you put $100 on a trading account, if you want to use 100% of that $100 on a position, I think that there's really nothing wrong with that. As long as you're completely willing to lose that $100, there's really no reason to, have to like do $10 positions or $15 positions if you're trading with a very low amount. But of course, if that $100 is like a tenth of your overall capital, then maybe that's not a great idea. But again, if you have, let's say, 500 times $100 in your bank account and you lose $100, it's really not a big deal at all. So really, you can do what you want as a hobby trader. It does get a little bit more serious for part-time traders, and assuming that you'll be trading in the thousands or even more, I'd recommend about 10 to 25% per trade. So what this means is that on an altcoin trade, let's say a very highly volatile altcoin, you may want to just risk about 10%. And if you have an altcoin or Bitcoin that is really not as volatile, you may want to risk about a little bit higher as 25%. Now, when you get to full-time traders, accounts at least above 5 figures or even more at 6 figures, I'd recommend trading below 10% per position. So what this means is that you could even take 3 altcoin trades, and each altcoin has, let's say, 5% with a 15% overall risk. That's fine. What we do not want to do is risk, let's say, 30% on one altcoin. What we want to do is actually spread the risk throughout different kinds of positions that all have stop losses as well. And that's what I put below 10% here. Another way to put this would be, I would say, per trade, definitely below 10%, and per maximum equity at a time, I'd say about 25-30% equity at a time. I think that sounds fair. So that means you could take 2 to 3 10% trades for being a full-time trader at the same time and probably be okay. But do be careful about using a lot higher than this, because you don't want to lose all of your money that you actually use for day-to-day life. Okay, let's go through the 4 types of trader personalities. So we have scalpers, day traders, swing traders, and position traders. Scalpers are going to be looking to trade within a few minutes to a few hours. Typically, they're going to have large position sizes and very small stop losses. And then on the other end of the spectrum, position traders are going to be trading for weeks. And they're going to have smaller positions on some altcoins with really deep stop losses and large take profits. And then in between, the day trader and swing trader crowd are going to be really alternating between larger positions and stop loss, amount of stop loss that they have. I would recommend, if you're a full-time trader, you're probably going to want to be more in this area. And if you're a part-time trader, I think I'd recommend being more in this area, because if you're a part-time trader and you don't have as much time to trade, you may want to hold positions for a few days. And if you are a full-time trader and confident in your short-term trading ability, you could be a day trader and look to trade 1 to 2 trades, maybe 1 to 3 trades per day, with larger position sizes and smaller stop losses. Okay, so now I want to talk about risk tolerance. And to calculate your trade risk, you just have to do your stop loss percent times your percent equity used in a position. So if your stop loss is minus 2% and you're using 20% equity, then you maximum can lose about 0.4% of your account, which, of course, without slippage. Now, short-term traders, like I had said, are probably going to want to increase their equity and decrease their stop loss percent, whereas long-term traders are going to want to decrease their amount of equity but increase their stop loss percent. So these guys might be using a 10% stop loss with only 5% equity, whereas a short-term trader may want to use 20% equity on, let's say, 2 positions, and then have tight 1.5-2% stop losses. That seems like a fair deal. Really, the reason I'm saying this is to balance out the amount of risk, whether you're a short-term trader or a long-term trader. You want to have the same amount of risk, because if you don't, and you do short-term trading with a large equity and a large stop loss, that could lead to some very large losses. Okay, so now I got a question on time frames and analysis on different kinds of time frames. So what you can do with the triple analysis is if you're a short-term trader, you may want to just do a market overview on the 1 hour. So what that would look like is you just look at the 1 hour, you notice resistance, you notice price action and tails, like tails here, and then you also look at some volume spikes as well. Volume spike here, and then you maybe want to look at sentiment. Of course, this all depends on your own analysis, of course. But what you're doing on the market overview is trying to get a larger picture of where the market's at. And then we want to look at the active analysis. So that's going to be zooming in on the 5 minute. And on the 5 minute, it's going to tell us information that we didn't know before. So like exactly where sentiment spikes occurred, more detailed price tails, more detailed volume spikes. And then what I like to do is zoom in even further to the 1 minute. What the 1 minute gives me is really good detail on where volume spiked, on where momentum was high, on where we had price tails. So an example of that would be here, where on the 1 minute I could see a volume spike, I can see a spike in sentiment. So this already looks pretty bearish, and this occurred at 9:42, as you can see here. On the 5 minute at 9:40, that is going to actually probably look a little bit different, and that's why I like to look at the 1 minute to give me that better detail. As you can see at 9:40, let me just get rid of sentiment here. At 9:40 here, you can see a price tail all the way up to here. But of course, during that 5 minute trading period, what may have happened is price could have been trading here, and then in the last 2 seconds, it could have gone right down to here. So that's why we like to look at the 1 minute to really see exactly where, exactly when, and exactly how much volatility was occurring during that 5 minute window. And that's what you'd be doing if you're more of a short-term trader. If you're more of a long-term trader, you're probably going to want to zoom out a lot. Look at the dailies, the weeklies, and the hourly as well. So now I want to talk about the most common question that I've gotten on the Patreon, which is leverage trading. I'm not against leverage trading. I don't use leverage in when I trade cryptocurrency. There's nothing wrong with it. This data comes from Daily FX. So this is Forex data, but it does also apply to crypto because retail traders in crypto, retail traders in Forex, I think there's a little bit of overlap there. Let's take a look at the individual trade winning percentage. For those who use less than 5-to-1 leverage, the amount of wins they had was 61%. For those who use more than 25% of leverage, were losing their trades more often than not at 48%. Now, of all profitable traders, let's take a look at what do the majority of profitable traders do. The majority of profitable leverage traders use less than 5-to-1. 40% of those in profit use 5-to-1. Only 17% of those traders who were in profit ever had an average leverage of more than 25-to-1. So really what this data is telling me could be correlation causation issue, but I think it's fair to say that the less leverage that one uses, the better off you will probably be. Using 100x on leverage on BitMEX is probably not going to lead to great results, especially over a long enough period of time where you're probably going to just eventually wipe yourself out. If you keep trying to just go all in, you're going to lose it all. So that's why I'd recommend just keeping an eye on the amount of leverage that you use, and try not to over leverage, especially if you're a full-time or part-time trader. If you're a hobby trader and want to, just kind of blow it up on BitMEX or do something crazy on BitMEX, I mean, I guess you could try to do these. But if you are looking to make this your full income, I would recommend either no leverage or really under 10-to-1 at least, probably around at least under 5-to-1 or anywhere in that vicinity. All right, so that's going to be it for this video. It was just a lot of different questions that I've gotten on the Patreon here and also some below. We have gone over traders' goals. We've gone over the different kinds of lifestyles, the amount of equity that one would want to use in different kinds of situations, depending on the trader's goals, of course. Trader personality, so looking at scalpers, swing traders, position traders, and so on. We looked at risk tolerance and calculating that. And we looked at triple analysis on timeframes and leverage trading and the advantages and the major disadvantage of using leverage trading. So if you guys ever want to just ask a question or have your response answered in a video like this, then you can join the Patreon and start voting and discussing topics. But with that, happy trading.